Hi everybody, this is Lance from ThetaTraders.com. This video I'm going to go over a modified 9% signal strategy that I've been using from Jason Kelly. I actually did an interview with him a few years ago. There's a link in the description down below to get more detail on how the strategy works. So the 9% signal is a really good investing slash trading strategy. I did a previous video talking about the difference between the two. In terms of me modifying the 9% signal to make it a little bit more of a trading type strategy, but it does have a long-term investing mindset. So I'm going to have a presentation to go over what I did and the slight modification I did to the 9% signal that will also take in additional premium and make it a little bit safer in most cases, but it does limit possible upside. Let's go right to that signal using options. So it's a modification of Jason Kelly's 9% signal. So what is the 9% signal? This is a simple rules-based investing strategy, and the aim is to grow wealth steadily while minimizing emotional decision making. When I notice a lot of members that are using it for trading, they have a lot of emotions into play. Many times they'll see how the market was going up. They're going to be using too much of their account. And then last week when the market dropped a bit, they freaked out and were worried that they were using up too much of their funds and they lost quite a bit of their gains. So you want to make sure that you have emotion out of your decisions. This combines aspects of passive index investing with active portfolio rebalancing. So that's a little bit of a spin on investing versus trading. You're going to target a 9% quarterly portfolio value change. Every 3 months, aim to adjust your portfolio so the value increases by 9%. Let's say you bought a certain stock that's at $100 a share. In 3 months, you want it to be at $109 a share. Now, this is achieved by rebalancing between the stock index fund. I use TQQQ for this, which is the triple leveraged NASDAQ QQQ. And then have an active cash reserve. I use that in Bill. It's a short-term bond fund from Treasury bills. After 3 months, take whatever's above the 9% from your TQQQ, and you're going to put that into your cash reserve in BIL. If you're below 9%, take your difference from the bill, so take funds from bill and put it into TQQQ, so you're at 9%, and then recalculate that for the next 3 months. This is the active rebalancing part of the plan. It keeps emotions out of play. If it hits the number of 9% and above, take the difference. If it doesn't hit the 9%, then you take your cash reserve. Pretty straightforward strategy and takes your emotions out of the vacation on the strategy. It does use covered calls to possibly amplify your returns. So what I did is I'm going to sell covered calls on TQQQ above the 9%, typically look around 12% to capture a little bit additional upside and also take in premium by selling the covered calls. I'm going to keep the premium from the covered call and put it into BIL. So as I have a little bit of an extra cash reserve in case I need it when I need to take funds from Bill into TQQQ. And then if I happen to get called away on it, I'm just going to start over on the strategy, buy your 100 shares TQQQ, buy your bill, and then sell another covered call. So here's what I did on 9/23. I bought 60 shares at 70.67. Later in October, I bought 40 more shares. This gets 100 total shares. Bought it at 75.45. It was already going up quite a bit. My average was around 72 and change. And then what I did is I sold a covered call right here that expires on 12/20, which was yesterday. And I sold the 84 strike price, took in $310. This was about a 12% increase from my average of my shares, and also took in $310 to sell a covered call. I'm perfectly fine with it going above 84 because that's a really good gain over the 9% signal gain. And I took in $310 no matter what. I placed that $310 into BIL for the extra cash reserve. For Bill, I had adequate funds See 31 shares, 91.7. Got a dividend from it. 22 shares, 19 more shares. So this is the active cash reserve I have available in case it doesn't make the 9%. Now, TQQ went up pretty dramatically in the last 3 months. We were hovering around the 72. At this line right here, I hit the 84. That's my covered call strike. It kept increasing from here, and the high was 93.25. So it's quite a bit higher than where my covered call strike was. Again, I was perfectly fine losing my shares at 84, although it would not be very convenient to buy the shares again at 93. It still made a really good return off the trade. Then the market dropped this week. You see the big down candle here. And we closed at 83.03, which happens to be a little bit lower than my covered call strike price. So TQQ was above 84. I almost lost my shares. However, it closed down to 83.03. My 84 covered call expired worthless. I was able to keep the $310 in premium that goes into bill, so get a little bit extra dividend interest from the treasury bills. And it was overall really good 3 months because I took in that extra premium and TQQ went up quite a bit from my around $72 average price. Monday, I'm going to sell another covered call. The goal will be 9% of the current value of 83. So do 83 times 0.09. That's 7.47. I'm going to add that to the 83 price. And we're getting around 90.47. So I'm going to sell a covered call above that. I'm going to look around the 95 strike price and then get some premium there, put it into my extra cash reserves and bill to keep the strategy going. Right now, with the volatility higher, there's a good chance that the premium will be more than $310. It could be closer to $450 to $500 last I checked. We'll just see on Monday what happens in terms of how much volatility there is and what the premiums are. So this 9% signal so far has worked really well. I gained almost 12% on the TQQQ. I also collected the dividend and it's going to just reset it on Monday. So if you're interested in seeing more about this strategy, you could join thetatraders.com and understand how the strategy works. You could ask me any questions. And we have many other option selling strategies like credit spreads, iron condors, strangles, covered strangles, and it's too many to name. I do a lot of different trades. So let's hopefully see you guys on the Discord and have a Merry Christmas, Happy Holidays. Next video will probably be possibly in the end of the year, but more likely early January. And I'll see you guys on the next one.